donation account really is an investment hybrid, and NCUA has granted expanded investment powers to fund charitable giving. And we'll talk through some overview of the National Credit Union Foundation. Joining us today also is Danielle Brown, the Director of Development and Donor Relations at NCUF. And then we'll talk more specifically about the program and how your credit union can benefit and participate. My name is Jason Ritzenthaler. I'm Co-Chief Investment Officer with Members Trust Company. Just real quickly, for compliance purposes, we're not providing specific tax, legal, investment advice. This is just meant to be general information, and we work with each credit union more directly to provide that specific investment advice, and we'll talk about that and how we recommend different portfolios and investment options for the charitable donation account program. With that, I will turn it over to Danielle to highlight the National Credit Union Foundation.
Well, thank you, Jason. I just wanted to spend a little bit of time before we get into the details of the CDA to let you know that when you invest in a CDA, you are actually supporting the National Credit Union Foundation, and state credit union foundations are critical work to really provide widespread financial education, to create greater access to affordable financial services, and to empower more consumers to save, build assets, and own homes. So as the philanthropic and social responsibility leader of America's credit union movement, the Foundation believes that all consumers should have the financial freedom, and the best financial partner to help them achieve that freedom is credit unions. So to that end, the Foundation really serves as a catalyst to help credit unions improve consumers' financial well-being. So we offer, some of the things that we offer at the Foundation, we offer great experiential learning initiatives that help credit unions reach out to a variety of members through either financial counseling certification programs that arm credit union professionals with the tools and knowledge to help members make good financial decisions. We do that through life simulations that expose credit union professionals to the hardships of poverty and help them use the lessons learned to better serve members in their communities. We also facilitate reality fairs for high school students and retirement fairs that motivate people to begin the retirement planning process. Through our popular Credit Union Development Education Program, or DE program, we train credit union professionals in the cooperative principles and how they can be used today to build strong communities. We also oversee BizKids, which is a youth financial literacy initiative that inspires kids to think about their future and empowers them to make smart financial decisions through an award-winning television series, free classroom curriculum, and outreach activities for kids in middle and high school. And we also serve as the movement's focal point for credit unions' generosity in times of need through our disaster relief contributions that support credit unions and their members. So the Foundation is really a critical part of the credit union system, and your investment in these accounts means that we can provide more resources, more programs, and more information to advance the financial well-being of credit union members. And it's also a great way to show your commitment to the credit union movement and its principles and participate in strategic philanthropy by aligning your charitable contributions with your mission. Earnings on CIF investments, including the CDA, are shared between the National Credit Union Foundation and state credit union foundations, so you support important work that's being done both on a national and a local level. So that's a little bit about what we do and the programs that we support at the National Credit Union Foundation that would be supported through an investment in the CIF. Jason?
Great, thank you, Danielle. Just a quick, little bit of background on Members Trust Company. We're basically a cooperative among credit unions across the country. We're owned by over 40 credit unions, and our mission is to provide trust and asset management services to credit unions and their members. For credit unions, we also work on supporting them with employee benefit funding, basically making investments to pay for employee benefits like healthcare premiums, 401k contributions, and then also working with them on pension assets or other credit union assets that they may have investment needs for. As an institution, we currently manage about $1.6 billion. The CDA program really was born out of a need that we recognized in conjunction with the National Credit Union Foundation back in 2011. Historically, credit unions have supported both the national and their state foundations through CD investments through the CIF program. And we all know, what happened to interest rates over the last 7-8 years. CD investments really weren't a great use of capital for the credit unions, and it really didn't provide a lot of benefits because the rates were so low to the foundation itself. And so we wanted to come up with an alternative structure that really could be a win-win for both the credit union and the foundations and the charities that they support. And the Charitable Lead Trust program was just that, similar to the CDA, Charitable Donation Account, which is the existing rule. It expanded the investment powers for the credit union and allowed us to invest in different types of securities that we could earn an incremental return without taking on a lot of additional risk. And actually, as we'll talk about, it helps credit unions actually mitigate some of the interest rate risk and risks that they have currently on their balance sheets and in their capital portfolios. That program, because of the benefits, attracted about $75 million in investments for credit unions on behalf of the National Credit Union Foundation in really about a 1.5 to 2-year time period. In December, NCUA decided to create the Charitable Donation Account rule really as a way to broaden the scope and allow all credit unions across the country, federally chartered, and we work with state chartered as well, to provide the same types of expanded investment powers. And so far, year to date, credit unions have currently contributed over $65 million to the CDA program. And hopefully, as we go through the details of the program, you'll see the benefits and how it really is a win-win for the credit unions and the foundations and charities that they work with. The Charitable Donation Account rule and regulation really is an investment hybrid. Basically, NCUA grants credit unions expanded investment powers. So you can invest in non-703 types of investments. So basically, we can invest in things like corporate bonds or even in stocks and equities in the equity markets. In giving credit unions that power, the primary purpose is for credit unions to use those investments then to fund charitable contributions. And really the whole goal is to increase charitable giving across the credit union movement, but really fund that through investment returns or the potential for investment returns rather than operating income. And so what the rule says, to meet the primary purpose of funding charitable contributions, the rule says that at a minimum, every 5 years, 51% of the total return on the investment must be paid to charity. And we'll go through some examples of that. Also, NCUA set a cap of 5% of a credit union's net worth, and that's for all charitable donation accounts that a credit union may establish, and it's for the life of the CDA. And so we'll talk about in our kind of administration how we provide support for the CDAs. We do those calculations and we track that for the credit unions that we work with. So those are the two primary rules and items that the credit union needs to follow when they set up their charitable donation account. As I mentioned before, the real goal and the reason why a credit union may use a CDA to fund their charitable contributions is because of those expanded investment powers. You're able to invest in securities that you otherwise wouldn't be able to in your capital portfolios. And if that's managed properly, you can have incremental returns, higher returns, without taking a lot of additional risk to do that. And so the idea there is that, again, you're funding charitable contributions through investment returns rather than operating income. It also allows the credit unions to reposition some of your balance sheet assets and mitigate some risks that you have, especially in this low interest rate environment, the interest rate risk that is out there. This is just another tool that credit unions have to mitigate some of that risk through other types of investments that they otherwise wouldn't be able to invest in. And ultimately, what we believe will happen is, and especially if we looked over the last few years, is we'll see that credit unions are able to increase their charitable contributions, but also earn an additional return on their assets that they otherwise wouldn't have through the primary 703 types of investments. So that's really where it comes in to be a win-win for both the charities and the foundation and the credit union itself. And in fact, over the last 5 years, we went back and looked, and compared to the traditional CD type of investment, a very conservative portfolio that we actually consider a CD alternative would have afforded credit unions the opportunity to contribute 5 times more to their foundations, but also earn 5 times more on their money on top of that through these types of investments. And so really, the proof is in the pudding. That's where it really is a win-win for everybody involved. We know it's important for credit unions to maintain control of these assets and these investments, and that's exactly what happens within a charitable donation account. It can be terminated at any time if the credit union chooses that they don't want to participate in the program any longer. They can receive the funds back. They would just need to pay out that 51% of any total return that the funds had earned over that time period. The credit union also ultimately controls the investment strategy. We work with the credit union, go through the different portfolio and investment options that we have available. We develop what's called an investment policy statement where the credit union is telling us exactly how the funds should be managed from an asset allocation standpoint, the mix of stocks to bonds. And then from there, the credit union gives us discretion within the constraints or the confines of that investment policy statement to handle the day-to-day investment decisions and making the active management portfolio decisions and the tactical investment decision-making along the way. Credit unions also have online access, daily online access, monthly. They can receive statements. We felt that it was very important to have these investments be transparent. We wanted each credit union to have their own separate account where they can log in and see the exact investments and the dollar amounts that they have in the program, rather than being a pooled type of investment where you own just a portion of any securities. And we felt that that was extremely important, and transparency is an important factor when looking at investments in these markets. Accounting for the charitable donation account, actually on the call report, a line has been added for CDA investments to report any charitable donation account investments. Also, credit unions have the option of how they want to account for these investments. They can be available for sale treatment, or they could choose to do a trading security treatment. Generally, credit unions are using available for sale, which means dividends and interest flow through to the income statement, as well as any realized capital gains. Any unrealized capital gains flow through the comprehensive income and on the balance sheet and the equity account. And so essentially it's mark-to-market accounting. Certainly we can talk with you more about that, and we have some accounting opinions for you. But certainly, ultimately, we do recommend that you verify the accounting treatment with your auditor and regulator. I mentioned at the beginning that the charitable donation account regulation actually says that the credit union needs to contribute 51% of the total return to charity over a 5-year period. And while you certainly can establish your charitable donation account in that fashion, what we have done with our program, and what we think is a better way for both the credit union and the charity's perspective, is to do it on an annual basis. The foundation, national foundations, state foundations, all the great work that they do requires funding, and really on a more consistent basis than just every 5 years. And so what our program does is on an annual basis, at the end of each year, we calculate what that total return dollar amount is, and then we tell the credit union what would be payable to their charity and what would could be retained by the credit union as excess earnings or return. And we do those calculations, and so that total return is a combination of all the interest and dividends that that portfolio earned over the course of the year, so that's all the income, plus any capital gains, and which ultimately means the price change or the price appreciation in the security. So it's both a combination of the income and the gains that the portfolio sees over the course of the year. We do those calculations, we work with the credit union to determine where those payments should be sent, and then we distribute them out of the charitable donation account itself. And we feel doing that annually is better matches the charitable intent and really benefits the charities and the credit union, I think, more appropriately. So just as a quick example, let's assume there's $1 million investment. Over the course of the first year, the portfolio earns 5%. That 5% is dollar-wise is $50,000. So we take that, we calculate 51% of that, which would be $25,500, is what would go to charity, and then the excess, the additional return, is the $24,500. That's the 49% that's left over, and that's the additional return that the credit union sees. So in this example, you can see how where it is a win-win, and ultimately, over $25,000 worth of charitable contributions have come from investment returns rather than operating income for the credit union itself. And so it really is a win-win. Just a real quick example here. This is our income portfolio. It's basically a CD alternative, and I'll talk more specifically about it. But this is over the last 3 years, calendar years. You can see in 2013, the total return was 6.13%. And so what that meant was, at the end of the year, 3.13% of the investment made by the credit union would be used as their charitable donation, and the credit union earned an excess return of 3% on top of that. So given generally the 703 portfolios for credit unions are all in high-quality bonds with interest rates so low, that type of a return is very attractive in relation to what credit unions had otherwise earned on their portfolios, and they're funding their charitable contributions. So in 2012, that total return figure was 6.64%. And we have this historical data going back all the way to 2005, 2006 for a lot of our portfolios. Another portfolio option, instead of 25% in equities and stocks, this one's 40% in equities, just a little bit more aggressive, still on the conservative side overall, but a little bit more aggressive than what we just talked about. You can see the returns for this portfolio type have been even better over the last couple of years, over 10% last year, which meant their charitable donation was 5%, and the credit union still earned an excess return of over 5%. So what's really important, we feel, in working with credit unions is these types of investments means expanded investment powers are similar to the types of investments that credit unions have used for their pension funds, but it's not similar, or it's different than what credit unions historically have done for the capital portfolio. So what's really important to us and for credit unions is that they do their due diligence on any investment that they would make. And as a trust company, we act as a fiduciary for all the investments that we handle for credit unions and our members. And so we have an investment team of 4 chartered financial analysts, which is one of the most prestigious designations you can receive in the investment community. And we take that fiduciary responsibility that we have extremely serious. From an investment philosophy and standpoint, we're a conservative investment firm. I often put it in baseball terms for individuals that I talk to. We're trying to be singles and doubles hitters in the portfolio returns that we see, rather than swinging for the fences, trying to hit the home run, which brings the strikeout into play. These types of investments for credit unions, we want to have kind of slow and steady, consistent returns rather than big up years and big down years, because these portfolios and these returns will have a small impact on the income statement and the balance sheets. And so we know that we want to have, generally credit unions want to have conservative types of investments for their charitable donation accounts. And that's where we really work with you and how our investment strategy comes into play. To minimize that risk in the investment world, it's called volatility. The investments that we use to build the portfolios, rather than picking individual stocks or bonds, which an individual company can go out of business and that value of that security can go to zero, we choose to build the portfolios using broad indexes. So, for instance, the S&P 500, because we know that using a broad index that owns 500 companies instead of one reduces that volatility or the risk to that part of the portfolio. And so we've used what are called exchange-traded funds. They're basically like a mutual fund in that they're a basket of stocks or bonds, but they trade during the day like a stock. Not that we're day traders, but that gives us flexibility in markets that are moving to make investment decisions throughout the day and to really manage risk throughout the day. And so we use these ETFs that track broad indexes to really diversify a lot of risk and reduce the overall portfolio risk and volatility. They're also extremely low cost. We know that's an important factor for investments and for credit unions in general. We want to keep the internal costs of this charitable donation account as low as we possibly can, and the weighted average expense ratio for these portfolios is 0.14%, which is extremely low. A mutual fund type portfolio can be, 0.5%, 1%, even 2%, depending on the types of security. And again, these portfolios are extremely transparent. ETFs provide daily views of what the securities are within them. And so we know on a daily basis exactly what we own, and credit unions know on a daily basis exactly what they own, versus other types of investments like mutual funds that only generally report on a quarterly basis. I said that we're a conservative investment firm, and it's really easy for different firms and investment companies to say that. And so I think the best example that I can give is back in 2008. We all remember what was happening in both the stock and the fixed income markets. Stock market was down close to 40%. We were actually highlighted by Forbes.com with the #1 portfolio and the top ETF manager for that time period, and that was our income ETF portfolio, and it was ranked #1, and really it was a CD alternative. And if we look here, you can see returns from 2008, the time period that we were highlighted by Forbes, that this portfolio, even though it has 25% in stocks, in equity, it was down less than 1% in an overall stock market that was down close to 40. And so we say this is a CD alternative type of portfolios that a lot of credit unions are using. It's not a CD. It's subject to market risk. You could lose value, but I think that's a good example of the type of risk that you're taking in a market down close to 40%. The portfolio is down less than 1%. And you can see over the last 3 and 5 years, the returns have been very good, and that's really where it comes in. It's a real win-win for both the credit unions and the foundations and charities that they're working with. This type of portfolio, it's a mix of fixed income and equities. With this kind of a portfolio, we're looking to have primarily large companies, large cap, U.S., and we have some international exposures. For this type of a portfolio, we don't get into allocations of, say, emerging markets or small cap. As you increase the equities, and say if the credit union decided not to do this income and they wanted to do a conservative of 40% equity portfolio, we can work with them on that, and that's when we would start incorporating some other asset classes on the equity side. Fixed income, right now with the interest rate risk, we're relatively short duration, but we're going to manage that interest rate risk and take advantage of any opportunities that are out there. So there will be times, this is a snapshot of what the portfolio looks like today, but we're going to be making adjustments to that over time to manage risk and to take advantage of opportunities that are out there. Our goal is to provide credit unions with everything that they need to make sure they're meeting all the requirements of the CDA regulation. That begins with working with them to develop a board or investment committee policy that addresses the charitable donation account as well as the investments for the charitable donation account. We have draft policies for that we can work with you on. It also is making sure that you're doing your due diligence for any investments that you're thinking about making. We put together, we call it a pre-purchase analysis packet of the different portfolio options so that you have all that information handy in one place so that you can provide that to your auditor and your regulator as they look at your charitable donation account program. We develop the investment policy statement with the credit union. Basically, that's the blueprint of how the investments are going to be handled and what our role is as the investment manager. We provide the annual reporting. We do the calculations of what that total return is, what should be distributed to charity, and what would be kept by the credit union as additional return. And then, of course, we provide the credit union with reporting documents, whether it be monthly statements that have all of the transactions and detail needed to do the accounting on a monthly basis. But then also credit unions have real-time internet access to see the value of their accounts and the returns. And certainly we make ourselves available to talk about what our investment strategy is to the credit union staff and to talk through how the portfolio and the investment is doing. So again, our goal is to at the end of the day, provide the credit union with a packet of material that addresses, the investment pre-purchase due diligence that's required, the due diligence of just this charitable donation account program overall, and how they're funding and administering their charitable donation account, and then also the ongoing reviewing to make sure you're meeting less than that 5% of net worth cap, and the annual calculations for the donations themselves, and we provide all of that. So with that, that's kind of the end of just our quick overview of the charitable donation account. Certainly myself or Danielle is available to answer more questions, and we'll open the lines here in a second. Just did a real quick overview of the investments, the investment options. We work with the credit union to really customize and tailor the portfolio to the specific credit union's needs and their risk tolerance and their goals and all of those things. So, if you are thinking about this and just thinking about potentially doing this, I really would encourage you to reach out to us, and we can sit down with you and talk and go through the program from the beginning and to see if it would be a right fit for your particular institution. Thank you, everyone, for joining us. We really appreciate you taking the time. And ultimately, the goal as we worked with NCUA and the National Credit Union Foundation on developing this program was to increase the level of charitable giving across the credit union movement. With that, thank you for joining us. Please feel free to reach out to us if you have any questions.